Here is another day where we talk about financial markets. And on this day, we're talking about what you need to know as a new trader in the market. What do you need to know as a new trader in the market? Because every day you come, find new people, you meet new people talking about, hey, I want to be a trader. Oh, teach me how to trade. Oh, Fred, I want to know how to trade so that I can sustain myself, my family, and all that. And you feel the genuine that's the sorry to say genuine urge just to make it in the market. But you know what, to your surprise, it doesn't work that easily. And and let me say this, and it's not a get rich quick scheme. Why am I saying this? Because when you get to the markets, the first time you're in the market, and let's say for your first month, let's say the first quarter of your trading will be a real roller coaster, and especially if you're doing it on your own. That is, you don't have a mentor, you don't have a community that's supporting you. You're all on your own, trying to study, and all that pertains to gaining knowledge in the market. So, what do you really need to know as a new trader, someone who wants to start trading and actually have an edge and something that he or she can capitalize on in the long run? Because you don't want to be a short term trader, you want to be a trader who can use the skill they have grown or they have gained for the longer period in the markets. And let's say to be realistic, just to sort of build capital to do something else, to diversify, to invest in stocks here and there, invest in some real estate here and there, and invest in things that you really want or you envisioned earlier on in life, as well as enjoying yourself, because life is not all about making money and reinvesting it. You also have to live and live up by trying to enjoy what you make. At least when you reward yourself, you feel you create more reason and let's say momentum to keep going. So, what do you know? What do you need to know as a new trader? First, you need to understand the basic market terms. You really need to understand the basic market terms, and there are very basic websites out there. And this is not an endorsement, but I usually tell people you go and try this website. It will give you basic knowledge that you will build on when you're trying to advance later in your trading journey. So this site is called babypips.com, and from the word itself, baby pips, you feel like it's trying to nurture you from a very uh, ground level, taking you to the upside. So what you need to understand in the markets, the simple things: risk. What is risk when you're trading? What is risk when you're trading? Secondly, what is reward when you're trading? And these two names or two phrases or two words go hand in hand: risk to reward. Risk is how much are you willing to lose in the market. Reward is how much are you willing to gain in the market. So if you understand risk to reward, you will find out that you need to be risking less and gaining more. And how do you achieve this? It's by having an edge in the markets, knowing what you're doing, being in the market at the right time, trading at the right time, not trading every now and then, because that will amount to gambling and you'll end up frustrated. What else do you need to understand? Economic calendar. The economic calendar is meant to give news releases to the masses for the financial markets so that they are able to know what to expect, where the market's going, how the markets could be influenced, and such things. So you really need to read deep and understand how the economic calendar affects the financial markets. You don't want to be trading when major news releases are coming, because the market might whipsaw you, and whipsawing you means it might go up and down undecidedly and hurt you or hurt your positions in the market. So you need to understand, are you a trader who wants the market in high volatility, or you want the market to be moving in some smooth form of fluidity? So it's good to understand the economic calendar and how the news releases affect your pair or your choice of trading instrument. The other basic term or basic thing you should know about the market is the technicals, and most importantly, the market is moved by supply and demand. It's just a supply of buyers here, a demand of sellers there, and so on. So you need to identify these zones where there are many buyers, where there are many sellers, where sellers and buyers are equal or are at equilibrium. How do you identify this? Sometimes you will see consolidation in the market. So this is a new term you should, if you're a new trader, you should be looking up consolidation. You'll find the market is not moving; it's ranging. It's just moving around a same or a same. Sorry, moving around one zone, and you don't want to find yourself in undecided market unless you are a trader who trades ranges and consolidations, and there are many types of traders, so you should also establish what type of trader are you. There's a scalper, there's an intraday trader, and there's a swing trader, and to a greater extent there are investors. These are people who stay in the market for long, someone who can buy or can take a position on S&P 500 or on News 30 and hold it for 5 years. That's an investor. But you'll find a trader will take a position for minutes. That's a scalper. Uh, will take a position for several hours in the day. That's an intraday trader, or a swing trader who might take or hold a trade for a week, several days, or even several weeks. So you also need to identify which type of trader are you. And with that said, I come back to, you are a novice trader, you are a new trader. Just like in any business, you need to understand how how do I get to understand this business? How do I make profit? How am I risking in this business? And how willing am I to learn and be persevering in the business? You treat you treat it as a business. Because if you don't treat it as a business, it will be something you're doing for fun, and you might not really end up achieving serious goals. So you must be serious about it, and you'll end up making serious decisions and serious moves in the long run. So you need to understand it's not a get rich quick scheme, as I earlier said. Be patient, be flexible, be practical and real with yourself. The market owes you nothing. Get that clearly. The market owes you nothing. So be ready to learn from what the market gives you or takes away from you. And most importantly, as a novice trader, as someone who wants to start trading, get yourself a demo account. Have a solid strategy together. Test this strategy, test it to the best you can. There are simulation tools that give you almost real market conditions, only that they are in the hindsight. So this is information from way back, and it really helps in filtering out the noise in your strategy and having some clarity to a greater extent that assures you of profitability and consistency. People have done it, they're doing it. Some people don't consider backtesting reliable. I consider it very reliable. And backtesting, in my own opinion, should be supported by forward testing. And forward testing is actually practicing what you've done on the backtest in real market conditions as you go by. So that you'll be able to know, okay, from the data that I used from the past to uh, have some results from my backtesting, am I able to achieve the same in the in new markets? Not in the new markets, but in these new and recent times. Is the market going or assimilating to my strategy? And this will help you make moves in the long run. Importantly, you need to master your psychology and emotions. You see, trading is a game of risk to reward. So if you don't understand your risk, you'll find yourself risking more than you're gaining. And this makes you or sends you into some wave of emotions. You find yourself, oh, since I'm risking too much, uh, and the account is going in the negative and keeps compounding in the negative. Why don't I keep moving my stop losses and take profits? And most importantly, the stop losses are a very critical part of your trading. That's, or rather, stop losses help you know what amount you're willing to lose and they guide your capital. But if you keep opening or rather pushing your stop losses further from where you had them, you just expose yourself to more risk. It's rather important to cut your losses and wait for the next setup or next opportunity. Like someone I used to look up to a while back, he used to say, setups are like a bus. There will always be a next one at the stop, at the bus stop. So you don't need to chase every time. You don't need to chase every time. And whenever you chase the market, they'll most likely disappoint you. So cool your emotions, master your psychology, go there, look for psychology courses, understand yourself, understand your personality, assimilate your personality to your trading strategy or vice versa, and that will give you an edge in the markets. What else might I have forgotten? And most importantly, try to have a buddy in your trading journey. You don't want to be alone in the trading journey, trying to do all things by yourself. Have that friend who you like minded, who wants to start trading. And it's not a guarantee you'll find that friend. Or you have that friend, you'll have that friend. And at some point, he or she might give up. You'll be left on your own. So what do you do? What do you do? You just look for a community. Join the community. You don't have to pay. There are very many free communities out there. See how best you can fit into that community. See what you can learn from that community. And if there are courses there, check the courses. If there are boot camps, webinars, whether free or not, try your best to be in them. And this will form a solid ground for your trading career and passion.